Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
8:30, we have a CPI report, so we need to really take a note of that. That's a Canadian CPI report. That's 8:30, 10:30. Not much low crude oil inventory reports. That's an every weekly thing. Well, that should affect the Canadian dollar as well. The FOMC statement coming up at 2 p.m. and 2:30. So just be aware of those time frames. Wait, if the Canadian dollar or the U.S. dollar are starting to kind of go sideways before then, just expect maybe a little spike right after that. So just be aware. Buyer beware. And look at and we'll look at Hercules and see what's hot, what's not. We had a little bit earlier I was looking at, and I saw that the British pound was real strong and the euro was real weak, and then they seem to have flipped over a little bit now. So that's that was all within about 15 minutes. So if you got into a trade with that, be careful. I did take a small position on a short on that when I got to about 50% Fibonacci level. I'll show you what I did, and then but it just kept on going. So it's right now it's still inside the zone. I'm still not worried about the trade. But it's something to be not paying attention to. There is a little zone up around the 85.18 area that's got to get through. So, but having said all that, keep in mind, remember the upper left-hand chart up here is the 1 hour. The upper right is the 30-minute. The bottom left is 15-minute. And then the bottom right is the 5-minute. So I'm primarily focusing on see what the direction of the 30-minute is right now, looking at the Canadian dollar, and the yen is the CAD is strong, the yen is weak. And then on the 15, the CAD and the yen are the same situation, and on the 5. So we're going to go take a look at the CAD yen. CAD yen, let me say yen pair. That's going to be a 2-digit indicator. CAD yen, here we go. And X this, and we'll see what we have here. We can see what our Fibonacci zones are, and right now it's right in between a green and a red zone. It just popped through the green, right? Which is right about here where the price is right now, about 87.54. So we're going to draw our fib lines between 87.77 and 87.55. Mark our zones. Come over here to the 5-minute. Make sure they're pretty tight. Move over so we can see. Find my zone. Remember the blue zone. Any zone on the 15-minute chart is going to be a blue zone on the 5 and a blue zone on the 1-minute chart with the 2 factor of it. So it's a 2-minute. Let's tweak this just a little bit more. Bring this up just a little bit more. About there. So right now we're right in the lower. Let's see where we're at here. Actually, this thing is coming up from below. So actually, this is really kind of like an overshoot area right now. Let's draw it the other way down. Let's bring it on down this way. And we'll see if it breaks through this upper 25%, if this 25% overshoot, then we'll be looking to take it long. But right now, this thing could just be a head fake right now. The Canadian dollar is the stronger one, so that we're going to be looking for it to go long. And there's really what's happening right now. It passed it, closed through, nice strong close on it. It did not close on the 15-minute, though. It has another, oh, let's see, what's the time on this thing? We have another 2 minutes. We still have another 7 minutes to go on the 15-minute for it to close above that. We did get the 5-minute close, nice 5-minute close above the line. Everything else is still showing strong, although the Canadian dollar is now on the 5-minute chart or on the 1-minute chart is starting to a nice little pullback on that. But we're going to have to see if it's going to keep on going. If it keeps on going, then we're going to be looking for a target. If we get into this thing, it's a nice little pullback. It's coming back to retest that blue fib line, and we have some room to the upside. Okay, with these yen pairs again, I prefer to actually just stay on the 5-minute chart actually, because of the spreads between the different zones. They're a little bit different on this. It's going to be probably about 10 pips, I think, between these zones. 7 pips is pretty much about the same 7 pips but you need to be on the 5-minute chart in order to get the 7 pips out of it because of the prices. Right now, the Canadian dollar is still strong. We have a nice little pullback. If it could pull back to I'm going to set this one. If we can pull it back to the 87.53 area, I'll take a shot at this. So we're going to do it by limit 87.53. And the take profit is going to be 7 pips. See 87.53 to 87.60. Wait, 8760. Wait, 8760. 7 pips and then a 15 pip stop. And we're going to do a buy order. It gets back there. This is the CAD yen. Let me get my other chart set up here. And that's going to be, I'm going to put that in, it's at 87.50. See, so right now we have a buy order at 87, what did I say, 87.60?
Sorry, Al. I was checking out the charts.
87.53. 87.53 is our buy order. That's right. And then we're going to have a stop 7 pips and 15 pips. 15 pip stop, 7 pip target. Then we'll wait. So that was all set up, and we're just waiting for that one to trigger. Let's move on to the next one. Let's see. We have the CAD yen. We had the CAD yen. We could maybe look at the CAD New Zealand as well, or let's try the U.S. New Zealand. Let's try that one. New Zealand US. So it'll be New Zealand USD. The dollar is the stronger of the two, so we're going to be looking at going that to the downside. The dollar is the second currency of the pair, so we're looking at the strength to the downside. A 15-minute chart. Check out our zones, and we put the fibs on, and we have a blue line. Oh, it's coming right into a blue line. Oh, let's just close that out. We'll start this one over again. So we're going from high to low. And we're going to go from the green line, green 15-minute, down to the blue. Down to the blue. Come over to the 5-minute, tweak our charts. And we wait. Let's see. So right now we have a nice little, we have all the moving averages are in the correct direction. Let me see if I can show that a little bit better here. Here's our, that's our 30-minute 62 moving average, which is pretty close. It's not going to be, let me just go, I need to change these back again. I should change all the templates on this same chart, and there's going to be a 34. You see, there's been a lot of consolidation right here with on that part. But we have our 62. We have our green below our yellow. Yellow is and we have the cross. Everything's moving in the right direction on the 1 minute. Now this is where I like trading on the 1 minute chart. We're right at a red line, and here's the green line. So this would be our target down here. That'd be 7 pips. Once this little thing pulls back up here to this little area, let's say we can maybe try and take this trade to go short. Now you have a choice. You can take a full position and just go for 7 pips. And that's probably what I will do with this one. Right now I'm seeing that the dollar is weakening again, but it's still within the tolerance, and we still don't have our crossover moving averages. So we're just looking at this as being a pullback. But now I have 2 choices. One, I could take a half position, get in. If it goes against me some more, take the other half, and then go for my target. Or I can just go in with a full position, have my 15 pip stop, and hope I don't get stopped out. Or you could, if you take a full position, you could end up taking 2 full positions if your account can hold it and your emotional inventory can pay the price. Or you can just take like a half position and scale in. Worst case scenarios, you get scaled in, you take your trade, you don't get your second position filled, and then you just only have a half position for your profit. Either way, it's it protects you, and it's I mean, one, you just don't get as much profit if the second one doesn't trigger. I still like this thing right now on this pullback. We still don't have the cross of the moving averages. We do have the cross right now of the New Zealand is now getting stronger by 4. So right now at this point, I'm going to wait a little bit. I'm going to wait until this thing starts weakening again on this pullback. We have a little bit of an area right up here. This is actually a little wedge. Came down. This is still lower high, higher low. And we're going to flat top this to see where, if it comes back up and retest this little area right up in here. This is the area where it could consider this to be a little bit of a trap. Where it comes on up, breaks the little trend line. Actually, I didn't draw a trend line on this, but here's our wedge. This is a peak and this is where this is a high. Here's a lower high. And actually, we did have a little bit of a trend line going down there. I just drew the flat top off this D here, but theoretically, we could put this B over here. I can move the D over to this point. So here's the anchor, here's the hit, here's the trend line, the BD trend line. If it comes on up into that area, then I'd be willing to pretty much take this thing and take it short. This is right now, I'm just looking at this being a pullback. This could be a trap up here. And actually, we could have another trap right down here because here's the low and made a higher low. But right now, it's sort of stuck in between here. So at this point, I'm just going to stay away from this trade. I'll keep monitoring it and see what it does. I'll see if it breaks through the bottom here. But there's a trap up here, and then there's going to be another trap down below. Once it can break through this lower part, then I think you're looking at coming on down. Once it can break through this A, you've got a 7 pip spread down below to your blue line, which is still should be suitable. We'll lock this in. Any questions so far?
Good over here.
I prefer to see about a 15 pip target range when I take the trade. Right now, we're kind of stuck inside this 69.40 to 69.34. So there's only a 6 pip range inside where this thing is tracking right now. Once it breaks out of this wedge area, we'll see what kind of momentum this shows us, and it'll give us an idea which way to go with this trade. In fact, it is coming down. It bounced off of it's coming. It hasn't tested the blue fib line, but it did cross over the green, and we did get a green close, a close on the 15-minute, and we have the close on the. And you can actually use this green fib line as just as well. I'll expand these out. We did get the 5-minute close. It came back up and retested. So right now this is a pass, and it's retesting this area right in here, and we'll see which way it's going to continue. It came down, bounced, came down, bounced 1, 2, 3, 4, 5 times. Then it finally broke it. Now it's retesting the top of this wedge. We still have a 5-point spread on the 15-minute. We have a 5-point spread on the 5, and now we now have the dollar going stronger. So now, once I see it break through this wedge, I'll be taking this trade. Now we have our fib line. We have our lower red, our institutional line, we'll call it, and we will see. Let's see what it does. But once it breaks through this, if it can pass it, check. What I'm looking for right now is I'm looking for a little bit of a pass and check on this wedge. I'm going to see it come on down, hit close, come back up and test it, and then that's my target. That's the pattern I'm looking for right now. Now where the speed is going to be, I don't know. I want to see it close. I want to see it close below, and then maybe a nice little pullback to recheck this trend line. This trend line is going to be this A to the C area on the wedge. And right now, it's still going to come up, and it looks like it still wants to come up and retest the top of this one. So this one's kind of stuck in the middle there right now. Let's see how my Euro British trade's doing here. Euro British, I need to get that one on. Oop, I don't want that one. I have to pin that one in there. Euro British. Duplicate. Here's Euro British. And what is it doing now? It's still kind of hanging in there. Looks like I did get my second position filled. So we had on this one, remember the euro is the red line, the British is the purple line. It shows us our Hercules strength. So right now the British is stronger. British is the second currency of the pair, so we're looking at strength to the downside. And I'll just redraw this whole thing over to show you what we're looking at. And so we have a red zone and a green zone, so we're going to draw our fibs. You see it's hanging right around the 50% area of this range. And that's and actually I took my first position just as it was coming up to the 50%, and then it went and it broke through that part. You see it's coming in from the high to the low, and it just flattened out pretty much for the last several hours. And now it has a little bit of a wedge. So here's the little high, here's the low, here's the lower high, and here's our wedge. And I'm just going to flat top the bottom here. Put a flat bottom on. So right now it's inside this area. And put my fibs on here, and you can see right now it came right into that green fib line. It pulled back, almost kind of it came a little bit shy of the red. So right now it's a little bit shy of the green coming down and a little shy of the red going up. So this is a little bit of a trap. This is the area where it's having a hard time. So the area of operation right now is actually a little bit lower. It's actually this little area right here for the top. I'll call this a trap. And I'll clone the bottom and we'll see right here as there's the bottom of the wedge. You can see where you see it came just a little bit shy of this green fib line. And the range between here, that's the range is between 85.17 and 85.03. So that's a 14 pip spread. So actually, if it comes on up into this area, if everything's still showing a short, which right now it still is, we have a nice spread on our. Now this one got right back to only a 1 point spread. Right now it's battling between who's going to be the strongest on that one. So right now this is a relatively strong. That was a fairly strong pullback. But we want the British pound to take over. So if we can break through the bottom of this little area right here, we have a good shot. So there's a little bit of a rally. There's a little bit of a basing rally. Came back, retested once right in here. You can see this little pivot. Came back. You look over here, you can see where it retested this area. So this is a retest area. Let's see, where's my retest? Right there. So if we can get through this, if we can start seeing some strength, we get the moving make sure the moving averages are in the right direction. And right now they're consolidating right now. You have the 62 right here, you have the 5 right there, and you have now the 5 did cross the 13, which is the yellow one, but it's consolidating right around this 62. We need to get a nice clean break of the 62 before we can really want to take that thing. I'll go move this thing over just to fine tune it a little bit. And let's see here. And we have our 7. So if we can get a nice fill up here, this would be our first target. Maybe go a little bit lower with that. That would be our target area. So we might get a little bit of a resistance getting through this area, this zone, the retest area. But I took my first position right here at the 50%. Let's draw it on the 1 minute here. I got my first position right as it came up into this, as it pulled back right about this candle right here is where I took my first position to go short. It did take a little bit of heat. It did come up, and then I had my second sell order. It was up here at the 85.14. That got filled, created at the top of this wedge. Tweak this over here. So we have our high, our anchor. We have our hit. Now this wedge is still in command. And we have the bottom right here. And we're looking to see if it can break through and finally and pretty much retest the bottom of this one. Everything's getting stronger on the downside. We have a nice little spread here. And like I said, boy, this one is, we're kind of right in the middle between this red and green on it. So this is only like 7 pips from here. It's at 85.14 to down here 85.07. This whole range here is only 7 pips. That's not a lot. I mean, it looks like a lot more than that, but that's all it is. And so really the target's going to have to be all the way down here. If we can get in, say somewhere off of this break, if we can break through this little area up in here, which it seems to be struggling a little bit. You got these little pivots right here. It keeps on coming into that little zone right there. But I say I maybe be willing to take a buy or a sell stop right here about the 8509. And at 8509, if we can get a fill there, then we can maybe take a look and on down to the, but this is the area that is having a hard time getting through that little area right there. Questions?
No questions.
No.
I have a question though.
Okay.
I'm just wondering, you've flattened out the bottom of that wedge. When do you decide to flatten it out as opposed to going back to the left to see if there's another anchor possibly?
Oh, that's a good question. I don't have an answer for you on that one. Let me think about it. I think a lot of times it's because I don't know where else to put it. If I'm more inclined to see it being on a down move in this, as it is in this case, then I'm more apt to, especially if there's not much. Now, right now, I think I'd be more apt, as I look at this right now on the 1 minute chart. I think I'd have to go with this one right here right now. So now we have our high, a low, lower high. We have a little bit of a bounce here. It's kind of like if I don't know where it's going to bounce, I'll just throw a flat line until I find where this is going to bounce.
Mm-hmm.
I guess that's probably the easiest explanation I have for you at this time. And so right now you can see where it came right down to this little area. It rejected it. So I can move this up here for right now and say, okay, that's where I'm going to be. Or I could have just projected it with it because of that little, this little retest area here. I could have just projected that maybe that's where it would have been. But if I don't have a really real clear area, then I'll just sort of flat line it. We know we had this one. We know we had the high. We know we had the low. And we know we had a lower high that was a strong rejection. So there's our 3 points. And then where to put the fourth one is really subjective. And if I don't have a clear shot, I'll just put it flat in the bottom. If I have an area that I can look and say, okay, well, that's a good area, I'll just move it over here, like right now. Right now I like the fact that this pivot reject it, and then we have a nice strong candle. See that candle that just made right there? And this is the retest area. But so right now, this thing got real strong. The British pound got real strong. Nice move down, nice little break. But that candle closed, so I can probably take this thing short. Now, I'm already in this trade already. Let's see, this is British pound. I want to see a nice clean close. Now let's go over to the 5 minute chart on this one. I say we are in that retest area right now. It's still hanging into that area, so it's still finding some. And that retest area, it's not showing up on these higher time frames because you just can't see those little candles. But nonetheless, it's there. Let's see, I'm going to sync this, unsync that, and then moves that. Good, take that away. So here's that. What I talked about how to break the wedge, come back down, come back up and retest it. If I do that ABC here, so here's a point. Oops. Here's a point. Here's a point. Here's the retest. And then we're looking for it to go down. So let's just see what happens right here at this point. This struggles to get up. All our moving averages are correct on that one. All of our moving averages are correct on the 5 minute. All of our are they correct on the, looks like they're all correct on the 15 minute as well. So this is a retest. When this candle closes, if this candle closes and can't close, let's see, what's the 5 minute? How much more time do we have on the 5 minute here? Let's see. We have about 2 more minutes on the 5 minute candle. There's a retest. Now it's a red candle. I'm going to take this. I'm just going and do a market order to go short. Sell market. Now that's my spread there. Now you could have decided to think, okay, you got the rejection. You could have just put an order into a limit order right here at the top of the wedge. It may not be filled. I'm not going to quibble over a couple of pips in this scenario. I'm just going to take the trade. Euro British. Euro British. Euro British. Like I said, I'm already in that trade, so I'm at. Right now, it's the trade's working out for me. And again, my target on this one is going to be, let's see, target on this is you have the green. I'm going to use this 8,500 instead of 8,507. If it can't get through this, I'll probably pull the trade. But I'm thinking if, with this nice little move down here, everything else is still looking good for the strength. I'm going to use this zone right here between this green line and this. So I'm going to use 8,500, and I may just back it off just a couple for the spread. So pretty much 85. Probably 8501. Just bleed it a little bit. See. So that'll be my target. Basically 7 pips. And again, like I said, 7 pip target, 7 pip stop, 15 pip stop. And we'll see what happens. Now, this one actually ended up being a what we call a scale in trade for me. Is that I had one position that where when it came back up into the 50%. Let me go draw this out. When it pulled back down, when I first sat down, this was right around 7 o'clock this morning. It pulled back and it was coming right up into this 50%, came back up, gave me this red candle. I took it short, looking for my target down here of my 7 pips. So that was at 85.10. My target would have been 85.03. It got me in, and then it went against me. So that's when I went and I looked. There was this little zone up in here because I had all these little tops right here. So I had a little program that showed me this little zone, but there's a little zone right up in here, right around the 85.14 area, right about in there. So I said, okay, if it goes up to the 85.14, it was still showing as a pullback. I said, if I can get back in, I'll take a second position up here. So right now, my dollar cost average is between the 85.14 and the 85.10. So my dollar cost average of the trade right now is right about in this area right in here. And so right now I'm overall profitable as it's going on down. And my target is still going to be pretty much the same, 85.01, 85.02-ish area. And that's going to be right about as it comes back to retest this area. Now, when it gets closer to this little pivot here where the B is, it's probably going to have a little bit of a reaction to this. So this is basically going to be, I'm going to move this up to, we're going to call this the demand area right in here. So we'll see if it comes back down and retests the bottom. This could be a turnaround point where it's going to be maybe turning around. We had a nice move down, lower high. And it's actually, if you can see right now, this is a little bit to answer what Eva's question was. This is where I'm starting looking at as we don't know how low this thing's going to go. So I do know it may come in right about into this area. So I'm going to project this. But I could just as easily flat bottom it, or I could just as easily say, okay, here's the new low. I'm just going to put it right there and see if it breaks again. But we had this nice little up drop, little base in here, and it pulled back down again. I like these strong moves coming down. Strong move down, pause a little bit. Strong move down. It's pausing. It's right now it's still building on that. Now we're on a 5-minute candle here right now, so we still have a higher low or a high, a lower high, a lower high, and each one of these candles are creating lower lows. So it's trend right now. It's starting to trend with lower highs and lower lows. So we can, and all our moving averages are good. It's outside of the range, and so right now, in all honesty, we could keep our stop probably somewhere around this 50% line, or maybe a little bit higher. Keep it somewhat out of harm's way. But if this thing's going to start trending hard, these things are going to start just pointing down a lot harder, and then you can just track it with that 13-period moving average. Questions? Quiet group today.
Well, not really. We're just kind of in the chat. We did have a question about, well, I responded regarding scalping. I was just explaining that scalping, because a lot of people mistake scalping for a quick moving in, out, and that's it, no analysis involved. But it usually takes a whole lot longer to analyze the best place to get in and get out than the actual trade takes place. So I was just explaining that one to one of our people in the session. For example, I took a German this morning. It took me about 10 minutes or so to analyze it. I finally set my buy stop. It triggered and I was out with a 6% profit on my account within 3 minutes. So, you know what? Sometimes the setup takes longer, but it's part of the job, guys. So you have to do that. You can't just jump in wherever you feel like.
You have to plan the trade and then trade the plan.
Exactly.
Know what you want to do, and then you draw it out. You set the trap. You set the stage for where you want, and you want the price to come to you. You don't want to go chasing it. It was like if it starts taking off, say you look and say, "Oh, it just broke out. I think I want to go and just chase it." No, you just wait. I mean, if it's breaking out as you see it breaking out, and you don't have your trade set, like I said, a lot of times, I was projecting it to come down, break, and then move back up. As soon as it moved back up and I got a red candle, I just went market order in. But I waited for that red candle to come in. Now it looks like it's coming back to retest this little area up here again. So we had the break, close with low close coming down. Now it's coming up. But now we're going to see if this AC line is going to be respected. And so right now we should, if this thing does come back up and retest the wedge, it should still give us a lower high from where the C is. And then I could probably just move so right now I have my anchor. I have my first hit. I don't really have my third hit on my trend line. This AC line is a trend line. I have my second hit. I don't have my third hit on the line. So if it comes on up to retest, I mean, this zone is still a valid retest area. This yellow box is still a valid retest area. And let's see. That's pretty much it. Right now, we're just having to wait and see. I mean, it's going to, one thing about we often talk about emotional inventory. I mean, we all want to get in, get out, have all things. We don't want to have to be thinking about it. We don't have to be watching. We don't want to see it go against us. And ideally, in a perfect world, that's the case. But in the reality, it's not the case. And so you always have to have that what you're willing to accept as a normal situation to determine what's normal for you. And you have to make that determination of what's normal and what you can take. My suggestion is you always have position sizes small enough to where when it does this fluctuation that you don't get all kind of crazy about it. And that's why Brian often says, when he first started off, he would trade. Brian doesn't like to trade in demo. He always trades pretty much in with real money, but his position sizes are small. I mean, he may take a 0.01 position on a Euro US pair, but you're only looking at 10 cents, a 10-cent move on a 10 cents on a move. You're looking at pennies. So that, I mean, he can use the 100 pip stop so he loses $10. Not a big deal. But if he were taking a higher lot size, that 100 pip move could make a whole lot of difference. So just trade with something that if it goes, whatever you think it's going to do, kind of double it or take half of it so that you're comfortable with the drawdown. I guess that's the point I'm trying to make, is be comfortable with your potential drawdown. And if you're comfortable with a $10 drawdown on let's say on a 0.02 position size, back it off to a 0.01 position size, and then be even more comfortable with a $5 drawdown. And that's one thing that I really want to stress is that the more you're comfortable with the drawdown, because it's going to go back and forth, it's going to give you that fluctuation. But just know where your key areas are, and just know that it could break that area that you're suspecting and go to the next one. So just positional sizes so that if it goes to the next one, you're still not freaking out. And at that point, then you can probably take another position. The big thing is just to avoid being stopped out. But that doesn't mean you have just keep having your stops real big. Have your stops to a place where you can comfortably feel that you can accept the hit if it does get to that. And usually, if I'm using a 15 pip stop, if it goes 25 pips against me, most of the time I'm still okay with it because my position sizes are still small. And it's all relative to what your account size is.
Oh, excuse me.
Yes.
We have our comedic relief here if you wanted to pull him over.
Well, we do.
A special guest star, yes.
Our special guest.
Yeah.
Let me see here.
I mean, I'm laughing already.
Send in the clowns. Sorry, Brian.
There he is. He's probably on his phone. He may not be able. He may only be able to be in observation.
Oh,
We'll see.
Possible.
Yeah, he may only be in observation mode here today. But
yeah. He said no mic, just video. You're right,
yeah,
Al.
Yeah, we'll let him stay. we won't kick him. We won't kick him out today.
Too bad. As we're all safe today.
So anyway, right now this one's it's still. I mean, it's still kind of a. Yesterday I mentioned something about harmonics. I'm kind of. No, I'm not going to even go down that road yet. Disregard.
Probably best to leave it for a while.
Yeah, there's going to be a time when you're in this room where we may start introducing some other chart patterning type, especially if people are going to be using TradingView. They have this nice little tool called it's a harmonic tool, which basically what it does, it just draws a series of wedges from a pattern. And it just and it's a really a neat little study. In fact, that's really where I turned the corner with my technical analysis is when I started studying these harmonics. And there's programs out there that will just generate them for you. You can just say but it's a whole nother study in itself. But they're really rather fascinating. Right now, this trade still seems to be looking just fine. But you see where it came down, came back up, retested the wedge again. So right now, you see where this thing is. Where is it here? It really retested this 50% line. It came right up to the retest of 50%. So let me just take all this stuff off of here. So it came down, broke, retested the wedge with this first red candle, went a little bit lower, and now it retested the 50% line. And so, and here's a pivot low, here's a pullback, here's a pivot low. So here's a low, a higher low. There'd be nothing wrong with moving this thing over from here. Using actually, let's redraw this again. We could put there's the B. We could move the C down. We have the A up here. We have this one over down there. Move the C down to this one. No, this isn't going to work. I got to redraw this. Where's my triangle? So here's a low. Here's oh, that was a wick. There's the high. Here's the low, higher low. And here's the lower high. Make sure there's no wick there. Yeah, this is still the high that we're looking at. So right now, this is the bigger wedge picture. So that's why I'm looking at this thing coming down. Now, this could be the point where it's going to be starting to think about retracing. But I still suspect it's going to come in and retest this little area right down in here. It just makes sense to me. We still have the strength of the British pound over the euro. All our moving averages are still correct. And we have this little green fib line right down here as a potential target. And that's right here where this A is. It's right on that green line. This fell a little bit short of it. And there's a good chance you're going to be looking at this. It may come down, probably break this, and maybe respect that. But I'll be out of the trade by that time. And if you have and like I said, if you have a 2%, if you're taking a trade with, and you can get 2% a day on your account, and you can do that with one, maybe two trades, get 2% a day, and go out and enjoy your life. And then wait, come in the next morning and do it again. Or when you get back after having your life in the evening, maybe check out after 9 or 10 o'clock when the Asian markets opens up, maybe do it again for another. And you can do it once or twice, just find sections of the day. I would stay away from I say anything after 11:30, maybe even usually after 11 o'clock to about 3 o'clock, I usually try and stay away. I try not to take anything during that period of time. I may start again. I may try and take a little trade from about between 3 o'clock and 4:15 in the afternoon. I may look for something for the index, especially as the U.S. market starts to close. But if you can just find some time during the day, but pick your key times of the day. Don't pick the lunchtime, or don't pick 4 o'clock in the afternoon when the market's closing, and get stuck with when they move the spreads from 2 pips to 17 pips. Please don't do that, because the spread alone will, no matter what direction you're in, the spread will take you out. Unless you just don't have a target, have a stop in there. If you don't have a stop in, you're just gonna have a big drawdown for a few, for half an hour or an hour. But that's what's nice about the scalping, is you don't have to. I mean, if you have time to sit here, as I said, normally speaking, I'm in and out of these trades within about half an hour. Now, this one I started on this Euro British. I started this one about 7 o'clock this morning. It's right now, it's at 8:30. So I've been in this one for about an hour and a half. But this wasn't just a regular scalping trade. It started off to be a scalping trade, came up to 50%, looking for it to break down. I was waiting for it to break down from this candle on down, rather than having to go on up and come on down. So, and that's where you turn a scalping trade into more of a day trade, longer term trade. But right now I'm still good. It's still working the way I wanted it to, or modified the way I wanted it to. I adjusted my strategy to it as it was going against me. Here's it really didn't make any new highs from this B point all the way over to here. It didn't make any new highs. So you're decent now. This is your major trend line right here. And right now it's still trading inside this wedge. It broke the smaller wedge up here. It came up, it had a little wedge up here. It broke that. And now it's coming back down to, but that was just a wedge inside. This is actually a wedge inside of a wedge. If you really want to get down to it. Here was a low. Here's a high. Oops, let's see if I can draw it out here. Here's a low. There's a high. Here's a higher low. And you can bring that on up and see. So it was up in this wedge. It broke out of that wedge, and now it's coming down into retesting this area. And we can take a lot of heat on this thing. As I said, once it gets back down into this little area where I call the trap, I do like seeing we have like a little pivot candle, and then just put the little box right around the close and the pivot. That's usually that's all you really need to do. But you see that if you look at this big blue candle, now we're on a 5-minute chart, and there's some other probably little action going on in that. But if you see where here's a little wick, this is as far as it got retested. Now this candle right here tested, but you don't see any wicks on this. There's like no wicks. It did reject it. But we're going to see. But right now, the fact that this thing came down and there's nothing along here makes me think it's going to go all the way down to gets to these wicks right here. This is where the buyers came in, drove it on up, Seller said, well, not anymore. And then they bring it back down. But the
Now,
buyers are still waiting down here.
could you show your 15-minute, please? Brian would like to see your 15.
Brian? Well, if he were here, I would.
When did you start taking funny pills every morning?
When people told me I wasn't funny.
You were always the straight man. Now all of a sudden it's boom boom.
No.
When his voice started changing again, Brian says. There you go. He's still there. Mike or no Mike.
Yeah, there he is. Yeah. Well, tomorrow I leave for Orlando. Ride the wave.
Yeah.
Here's a question for: is anybody in our attendees? Are anybody going to Orlando? Put a little yes or raise your hand or something like that. I want to see if anybody in this room's going to Orlando.
See.
I'm not seeing anybody. At least I'm not seeing anybody, or they can't find their yes button.
Danielle is not going.
Well, I would not expect Danielle. I mean, I live in North Carolina, and it's still a little. Yeah. Well, Danielle, Danielle is in the UK, right?
Okay.
I was just talking to a friend of mine last night who's from the UK. She's British, and her sister still lives over there. And she was telling me about the trials and tribulations of traveling to and from the US. Now she's got a dual passport, so has dual citizenship, and it's still a major pain in the butt to travel across those borders. Yeah, traveling is going to be tough. Now, Eva, you're in Canada.
Yeah,
What are your restrictions now?
I'm really not sure, to be quite honest. I know people are traveling. I'm not sure what all is involved with them having to quarantine when they come back, or they're probably having to show that they've been vaccinated both times in order to actually be able to fly.
Are the restrictions Providence relative, or is it just Canada in general?
It's just Canada in general. I don't think there's any provincial borders closed at the moment because of all the vaccinations that have taken place.
But like, could you travel from one province to the U.S. versus another province to the U.S.?
Yeah. I don't think it's Canada wide, right? It's Justin Trudeau who decides whether or not
that matter. Okay.
Out of the country. It's not a provincial initiative. You know, it's like, I don't know about you guys, but I don't know if your state governors tell you that, yes, you can travel across the borders, or if it's your president. For us, it's our prime minister is the one that says either Canada can travel or cannot travel.
Uh-huh.
So
yeah, I'm not sure what kind of restrictions we have here in the U.S. Well, it sounds to me like, well, I'm not sure what the restrictions are for us, for people coming in. If a U.S. citizen, you can kind of come in, but I think most of the time, nobody wants to leave the country right now anyway because of the hassles of getting back in again.
Yeah, that's it. I mean,
they'll let U.S. citizens in, but I think there's a certain process you have to go through in order to make that happen.
Yeah.
So yeah, it's still an issue. But anyway, we don't have any. It's my biggest question is that how many people are traveling. I think the inter-country traveling is picking up again, but they're still making you wear masks in the airports and all that sort of stuff.
To be honest with you, Al, I'm not even excited to travel from one province to another. I don't want to be in the air right now, as much as I miss my traveling.
Well, I'm not excited to leave home. To be perfectly honest with you, so I like our porch with my little fish pond in the back.
Sorry?
I said, I'm not even excited about traveling, period. Is that I like sitting at home in the back porch, looking over my little fish pond and watch the birds feed out of the bird feeder.
Okay.
That's
what
me.
that has to do with what I just said.
Well,
but, okay.
No, what you said was you don't like to travel, and I said I'm agreeing with you.
Oh no, I'm just saying I'd love to travel, and I'm missing travel, but I do not want to get on a plane right now.
Yeah.
No, I travel 3 times a year. Like I go to Europe and to the Caribbean and stuff. I haven't gone anywhere now for 2 years. So I'm really, really missing it at the moment. But you know what? I'm so not interested in wearing a mask the whole entire time I'm in a plane or any of that stuff, especially if I'm going over to Europe somewhere. 8 hours with a mask on my face would just about kill me, I think.
But the good news is you have us.
I do. You know, this is good. This is good. Oh, and Daniela's saying they're on lockdown again in August. They're locking them down.
Yeah. Yeah. It's
Anne is saying that Canada is opening its border to US to US for those that are double dosed in August.
double dosed. Okay.
Yeah.
But I think the jury's still out on the vaccines, and I don't have a strong opinion either way about it. I mean, I did get the vaccination, but that was because, one, I've got a wife who's a nurse, and she was working in the hospitals, and so they kind of wanted her to, and it probably made sense for her. She was teaching and nursing and everything else, and so one thing about living with the nurse is you get things that I wouldn't normally do because
She insists.
well, she encourages me. Let's just say that she's.
Oh, come on. We all really know that if she says yes, it's going to happen.
Not necessarily, but
No?
let's just say I highly respect her opinion. Let's just say that. But anyway, this little trade is starting to work out. I'd say really right now, if it gets down, if you're profitable and if you're in this trade and you're profitable and it gets down, there's 85.04. It might find a little bit of trouble getting through that. You have two areas. It's the 85.04, this little wick right here. That's 85.04 to the 85.02. That's only 2 pips. Then you have this other little pivot right down here, which is at 85.01. That's where my target is right now, at the 85.01 area. Because I think what may very well happen is this thing's come down, maybe retest it, bounce back. You may want to just get out right there if you're profitable, depending on how much profit you have locked in. Or you can wait for it to break, and then this could be the trap down. This is probably more of the trap. It breaks this little wick. You say, oh, it's going on down. And then, oh, lo and behold, here's that other little pivot down there. So let's just see. We can kind of watch this and see what happens. If anybody wants to see something else while we're looking at this, let me know. Everything else still seems to be pretty much. There's a Euro, U.S. New Zealand. That might be a possibility. Let's take a look at that one. Oh, that one's taken off. I just noticed that. Let's see how this thing's. Oh, we drew this one out earlier. That's what happens when we get talking. Remember I said it came back down? Well, right now it's. Yeah, see, let me move this out of the way here. It really never broke. Well, actually, it broke the wedge right up. We had a flat top here. It took here's the trap right here. See how it took the trap in? Couldn't close above the trap. It could. This would be the trap to get in for it to go short. It came back up, hit the 62 moving average, and now it broke. And it broke this little wedge. It actually broke to the upside. It formed a little bit of an uptrend on that. But here was an anchor. Here's a hit. Got a little bit of a hit here. Broke. And now the question is, how do you get into this thing? I don't know. Let's see here. Let's see, it's moving from a downtrend. So actually right now it's trending inside of a channel. Here's a high. Lower high. Here's a low, lower low. And there's our channel. Here's a wick respected. So we can take this away right now. You see how respect to this came down? No, actually, that's the price right there. Where's my fib lines here? Broke, closed below. Now the right here, that's at 8:30. So this right now, if I'm looking for a 5-minute candle to close below this red line right here, I've got to wait a few minutes. Got to wait another 2 minutes yet. So this red line is significant right here. This is a 2-minute red. I'll highlight that a little bit for you. 2-minute red. And now this candle right here, even though it's a nice long candle, it's only a 1-minute candle. And if you look and see the price, this was a new time right here. And as soon as that candle opened up, nothing closed below that line before. Now we got the 1-minute close. Now we pretty much, I prefer to wait for this 5-minute to close and get below that 2-minute. So we're going to have to wait pretty much and see. 35 would be that right about there. Now, what time is it? It's 8:30. We just had an announcement, I think, didn't we, at 8:30?
Canadian.
Yeah, the CPI report, the Canadian CPI report. The Canadian, what's that doing here?
There, look at that candle.
Let's see, I was on the Canadian. We had a buy on that one. Where did we get in on that? 87.53. We got in on that buy. Actually, did we? Yeah, we got in the buy, and we didn't get our profit taken. Interesting enough, it went up here. It did not get us into our profit. We had a buy on this one. Is that right? Yeah. It came rolling up. It got into my zone, but the spread did not get me out. That's why I usually don't like to take trades when I'm not, to just watch them. Because when it gets up in those areas, I want to be able to see where it gets in. Let's see, 87.60 to 87.63. They must have widened the spreads when it got up here. There's no reason why that didn't trigger.
I got a question for you, Alan, the Q&A.
Okay.
Danielle is asking, why do you mark the red line as 2 minutes? She's been trying to figure it out for days.
Oh, that's a really good question, Danielle. Because on my little tool, on my fib tool, if I look and see what my settings, it's a 2-minute setting. I don't have a 1-minute setting. It goes from 2 minutes to 5 to 15 to 1 hour, etc. But I only use it on my 1-minute chart, and that's why I call it a 2-minute. That's the only reason I do it. It is on a 1-minute chart, but it's a 2-minute. The fib line, the clock speed on the fib line is basically a 2-minute clock. And that's what these things are kind of predicated on, like a clock speed, a clock time. It doesn't make sense to me either, but that's what it is.
So your trade just got triggered right now.
Which one?
Whichever one you said that you're wondering why it didn't get triggered.
Well, no, looks like I was in.
Rajiv said that it just got triggered now after the news. Or were you triggered already?
Well, I was in the trade. The CAD yen, I was in the trade back here to go long. I got in here. My take profit was up in this area.
Oh, it's your take profit. It didn't.
Yes, my take profit never got me out with my take profit. And I think what happens is right now we're looking at a 1.6 spread, which is 1.6, 1.8. My guesstimation, what happened was when it got up to here, the spread widened out from a 1.8 to maybe a 2 or a 3. And that's why when it came up here, my spread, the spread wouldn't get me out of it.
Yeah, that's possible.
Yeah. I'd almost be willing to play money that that's what happened. Again, that's where when you learn to try to say, well, learn how the market works. Those are little idiosyncrasies that you don't always know about with the way the way the game is played, so to speak.
Yeah.
Yeah, it was jumping up to 2.1. The
Is
spread.
that what it was? Yeah, and
Yeah.
that's why probably why it didn't fill. And that's why a lot of times when I see it getting near my target, I'll just take it off. I just close it out. Now the fact that this thing just bounced off of this, I'm only down I'm down like nothing. I don't know that, and I'm in a buy position. Oh, I wouldn't even play around with this thing anymore because really the move is done. My move was done. I got in here. I wanted to get out here. I would have been out and then be done. Now, do I really want to be playing around with this? Right now, moving averages are saying to go short, so I'm just going to close this one out. It didn't hit my. It hit my target, didn't close me out on its own. So I'm just going to close myself out with pretty much a break even on this one. And start it all over again. Danielle, did I answer your question about when I say 2 minutes? Did that help?
Yeah, she said it did. That's what she
Okay.
figured, but she wasn't
Yeah.
sure. Actually, I'm just about to set up, analyze the NASDAQ. Can I share my screen and show
Sure,
the guys?
go ahead. Yeah, I'll stop sharing. I'll take it away there, Eva. Eva's going to be running the show tomorrow. I'll probably be here for a little bit, but I got to head to the airport tomorrow. Probably about the time I'll be here for. I don't know. I depends on how soon I want to leave for the airport, but Eva's going to be taking over tomorrow and then probably Thursday. So give her a little bit of practice here, Eva.
What's that?
Tomorrow's
I'll give you a little bit of practice tomorrow.
Yeah.
Tomorrow and Thursday
Friday.
and Friday.
Yeah. Okay, guys. So the NASDAQ is looking good for a setup right now. So for those of you that haven't been in the room before when I've been doing my setups, I like to look, I trade the 5-minute chart first off. So when I'm looking for a trade setup, I'm always on the 5-minute. And what catches my eye is when the moving averages look like this, when they're all in a row according to their value. Here's the 5, the 13, the 34, the 62, and the 200 moving average. And all of them are, it's just beautiful to look at this. So it's showing that it's an upward type of a trend. Now, I changed one little thing. I do look at the 15-minute just to see what it's doing, but I do not mark anything. I figured it was cluttering up my chart and I really didn't refer to it much. So I just want to have a look. And the momentum, because it is scalping, yes, it did come down, but now it's kind of climbing its way back up. So I just keep that in mind. But then I shoot down to the 5-minute and I'm going to draw my fib. So the fib, it's going from up or from the bottom to up. And where I start my drawing is the first pivot low, where the candles are closing under the 34. So I'm starting here and it's taking it up to the top. So this is my fib. So what I'm waiting for now is I'm waiting for this to pull back. And it's got to be a valid pullback for me. A valid is at least 23. So before I do anything, I have to wait and see if it's going to pull back. Sometimes it looks like it's going to, and then it just keeps on marching on upwards. I do not take a trade until it's finished doing what it has to do, hit its high point, and then has pulled back into my fib. Once it pulls back into there and my moving averages are still in the order that I want them to go, then I will set, in this particular case, a buy stop. I never jump into a market. Very, very rarely do I do that. Will I jump into a market? I prefer to set a buy stop. So I know Al calls it that I trade the breakout. I actually trade the continuance is how I like to think of it. I want it to break this top line, and that just tells me that the momentum is still continuing upward. So usually I will set my trade about maybe a couple of dollars above the zero line, above the high point. But I want to see what it's going to do first. This might not be the complete high point. It may not have completed its move upward. Until that happens, I have to sit and watch it. And this is our vendor. This is where it comes into play, where this is going to be a great setup when it happens, but we have to be patient and we have to let it do its thing. So it's got to come down to, like I said, at least the 23. If it comes down even lower, 38, 50, and then starts to go back up, well, that just tells me it's going to have a lot of momentum to keep going. I mean, it's not 100%, but the odds are pretty darn good that it's going to keep on going way past this zero. Now, I know some people, some of the coaches on Auvoria Prime teach that if it gets down to 76, they won't use this anymore. To me, until it breaks where the movement started, which is for me is down here, the 100, until it breaks that, I still consider it a viable trade. I have to just be patient and wait and see what it's going to do. These I know are going to cross over, like you shoot down to the 1 minute. You see it's getting ready to cross over, and that's only because it's starting to pull back, but that really doesn't mean anything. Until this pullback is complete, I do not set my trade, because I could set it right now to save time thinking, oh, it's going to, and I'll just delete it if it doesn't. And sometimes it will carry on its upward trend, trigger my trade, and in the meantime, turn around because it's reached the top and come down. So until it's done doing what it needs to do, I will just sit and wait. Now I use the RSI as well. The RSI is showing me that, yeah, it really wants to pull itself back. It hasn't done it yet. I will look at the 1 minute. Sometimes it's not sure what it's going to do here. And this is all just for my edification, so I have an idea. Now, if you look at the 15-minute RSI, it looks like it's totally overbought. So it might be getting on the higher time frame to start moving down. So I just need to be patient with this one, and I need to wait. See, it came down, but it only pulled back to here. Now this is a green candle, so it's anyone's guess at this point what it's going to do. If it keeps on going, that means I haven't hit my high point yet.
Excuse me, Eva.
Uh-huh.
You have a couple questions.
Okay.
Anne wanted to know, okay, what did you mean by start at the first low? And I believe she was referring to your pivot low.
My fib line?
Yeah.
My fib line here. Okay, I'm looking, my 34, which is this teal colored one in the middle, that to me is what determines where my fib starts and stops. So for me, even though this might be considered by some as being the pivot low because there's no candle close here, I won't take that. It has to actually, for me to be a true pivot low, it has to close below that line. So, I mean, this one here closed below the line. Let me see if I can make this a little bit bigger so you can see it. It closed below the line, but it's not the lowest point. You see that nothing has closed above the line until we get to this one. So this is the lowest point, which is where I will start. This, for the purposes of my fib line, I consider to be the start of the movement. Even though clearly you can see, like right here is the big move up. It doesn't matter. For my fib line, this is the point. It has to be the lowest point candle close under the 34, closest to current price. Does that make sense, Anne?
So it's the lowest candle that closes below the line.
The 34.
Whatever closes below, like this, all these candles right here have closed below the 34. There's nothing above the 34 until it goes into its upward move. So at that point, I will find the lowest candle. Doesn't necessarily mean it's the first one. This one could have actually wicked way down to here and I would have used it. But okay, all that means, like for an example, here we have it again. I can't reach my controls, but I hope you guys can see this. So here's the line. Let's say I was to draw from here up to here. So I'm looking, and the first candle, as I'm looking to the left, that closed under the 34 is this one right here. Everyone agree to that?
Yep, I do.
Okay, so now I'm looking for the lowest point, and if I keep looking to the left, well, now this one is closed above the 34. So that means, that tells me that anything from this candle to the left, I can totally disqualify for the purposes of being the lowest candle, because it's now closed above. It can't have closed above. So that's what I'm looking at right there. So now the lowest point would have been this one. And it's not necessarily the first candle that closed, but it's the lowest point. Whether it closes above doesn't matter, but it's the lowest point below. So that would be my fib line.
Okay.
Okay.
That seems pretty clear.
Yeah. So let me just get that guy off of there.
And guys, and this is a little bit what we were doing before we started using the those institutional Fibonacci lines. I mean, Brian just likes using those, and actually, I find it to be a lot easier to. But I think what Eva was just showing you is every bit as valid, and I say it's just personal preference of which way you want to draw some of these fib lines.
And it's a different strategy, right?
It's a little bit different strategy, a little different way of looking at things. You'll find out if you draw the lines like Eva just did, and we draw the lines like Brian's been doing, you're going to find out you're not looking at a lot of pip difference. Like when you're looking on these scalping trades, the prices where we're still going to be taking these trades are probably within 1 or 2 pips of each other. And oftentimes the difference there is where I will draw a zone. Between the institutional lines, which are pre-programmed algorithms based on a number, not on the price action, as opposed to what Eva's doing here, where this actually is based on the price action, based on a moving average, and it creates its own little algorithm in that sense. But yeah. Either way, it still works.
So the fib lines, the institutional fib lines that Al's talking about, I don't have them on the MT4. So right now I'm trading on the MT4, but those are equally good to have. I would have the 15-minute to show the institutional ones, just so I have an idea of what's coming, of where I am. Let's put it that way in the big scheme of things, because of the way that they're color coded. You've got the blue ones that could act as resistance or support, depending on if it breaks through. The red one, obviously, which is resistance, and the green ones, which are support. So, I mean, I would use them if I could only get them on the MT for that reason. But for the purposes of drawing my own fib lines to see where the price action is, I would still be using these fibs, how I do it. Like that for me would just be an informational tool. I know Al tends to use them for targets and different things. I have a completely different system in how I do my targets. So I go by the dollar movement is what I do, regardless of where the fib line is. So it's a little bit different.
Now, Eva, because you go by the dollar movement, okay, Rajiv has a question. Where will be your buy order? Is it at $2 above the 00, even although the price pulled back to a 38.2, say, for instance?
Still be, yeah, because I don't trade the pullbacks. For me, I don't know if I'm just not getting in at the right place when I trade the pullbacks, but far too many times they say you can't pick the top and the bottom. Well, guess what? I can. It seems not in a good way either, because if this was to pull back to 38, and if it was me doing this trade and it started moving up and I got into it, chances are it would never come up this high again. It would continue going down. And so I thought I came up with a different strategy that seems to work better for me in my headspace. So that's why I call it trading the continuance. I want to make sure that it's going to go above this 0. So yeah, I will put it a couple of dollars above, which would be, that's $2. You see that, like so it would be like right about here. Right about here is where it would be. In a case like this, the NASDAQ, because it is just one quick thing I want to explain to you guys. The NASDAQ is a 5-digit The value on it is 5 digits. It's 15,000. You know, and it's just like the US 30 is $35,000. Like this is another good one because of the way the things are moving. But because it's such a high value on this index, for it to move the slightest bit, I mean, look at this candle, for example, from wick to wick, it's moved $12. My take profits are $5, a $5 movement. So let me just set one up for you. Okay, so right now, because of the size of my account's $2,000. Therefore, my lot sizes are 0.20, and that's 0.01 per 100 in my account. I know I've got 2,100, but that's okay. We'll just use this one. So if I set a buy stop, okay, now I don't want to get it too close in case this does weird stuff because it's still kind of deciding what it's going to do before the market opens. But I would probably put it to about here. So I know it's breaking through that. Then I would go and I would change my take profit to $5 above where I got in. Now you look at that, and it doesn't really have far to go to trigger the take profit. Now on my lot size, I'd get $100 for that move, right? So to me, this just makes more sense for me in my style of trading. I'm not as technical as Al. He's more knowledgeable with these things, and I'm not. I struggle with it. So I had to figure out something else that works better for me. And this seems to be working so far. So that's kind of how I do it. Now, this thing, for now, I'm going to just move it out of harm's way because it hasn't even gone to 23 yet. So if it hits 23 and starts to go back up, then I can move it down to where I just had it. Does that make sense to you guys? Do you have any questions on that?
No outstanding questions.
Pardon?
No questions right now, but guys, please remember to put it in the Q&A. It just makes it easier to answer your question because in the chat, it may get lost. Thank you.
So now for the stop losses, my stop loss is generally twice what my take profit is. So we'd be talking at like a $10 move. But that is subject to change. And now I say that, let me just stick it in there too so we can see it. So it is 1502593. Okay. So it would be down here. Now, sometimes depending on what's going on and how things are looking, I will move that a little bit lower if need be, but don't forget, this is all in my mind. I would sooner mark it to know where is it not letting me draw this? To know where I intend on pulling the plug on this is, and then take it off. Because like Brian, I don't really trust the brokers. You see, I have to be prepared to take a $200 loss on this trade for the sake of getting my $100 out of it.
Oh, yeah, but does that candle have to close or just need to tag that 23.6 retracement?
It even just if it tags the 23.6, like right now it's down to the 23.6, even if just the wick touches it, to me, it's already valid. And that would be the reason. Good question, Al. The reason for that would be because I don't have far to go here. So as you can see, I'm getting in and getting out well below the 23, but I want it to at least get there.
You're right. So right now, your criteria was it's got to pull back to the 23.6, and then you can set the trade.
Yeah.
You don't set it before it gets back to 23.6. It just has to tag it, touch it, whatever it wants to do, but doesn't have to close below, or you just need to make sure you have a strong enough pullback for if it does snap back, it's expecting that you come and take that new high out.
Yeah.
And one thing about it is the way I look at this one right now is that if this thing is going to continue on, I think he was absolutely right on target with what she's doing. Now, if it pulls back a whole lot deeper, let's say it pulls back to the 50, 61% retracement, and then it goes back up, uh, that's almost like at this point, the deeper it goes back in, goes into against where, like if it goes from 23 to the 30 to the 50, the less likelihood it's going to break that wick. Because that could be the signs of a new turnaround, especially if it gets all the way down to below that your 61%, which is there's a pivot. You have a little fractal pivot right there. Go to the left.
Yes.
If it breaks that, that means it's making. It just broke that little pivot. That's where we talk about M's and W's. That's the middle of your M, and then when it snaps back up, it may not get her into that trade. If it does, it could go with a vengeance, but it may not even get her into it because of that.
But
she's more likely to get filled on a extension of the moment, a continuation, as she puts it, which is right on target. A continuation to get her in and get her out again.
Yeah.
There you go.
And the whole thing is that, I mean, even if it comes right down to here, and my plan, my criteria, if it doesn't break this, then I will still consider it as going upward. Once it breaks that, well, then that's a whole new ballgame, right? But because I have a buy stop on here, I'm not in the trade until it does exactly what I want it to do. I'm not going to be in that trade. So I'm not sitting there stuck in a trade that I don't want to be in, because now all of a sudden it's decided it's going to go this way for me, instead of the way that I believe that this is going to go. And like I said at another session before, for me to be willing to risk a $200 loss just tells myself and anybody who's using this strategy that I firmly believe this is going to happen. If it's going to happen at all, if it's going to trigger this, I'm a strong believer that it's going to actually hit my target. I mean, there's no guarantees, there never is in trading, but as long as like the picture doesn't change, which Brian likes to use that terminology, I still have my 5 on top. These things are still in a row. This guy here is starting to point up a little bit. So it's just a matter of doing this over and over that I realized what I need to be looking for in order to get into my trade or get out of my trade, or where to put my stop as far as that goes. Now, I've also been looking at zones. Again, this is, I can't get, I normally go to the higher, for example, to see if there's a zone that I might get stuck on. Well, looking on the high time frame, well, look at that. The next zone that I even need to worry about possibly is here. Because of the wicks, it may have problems getting through there. Well, I'm in and out long before I hit that. So for me, this just works most of the time. And I'm finding, like Al was saying earlier, is that certain times of the day are better for trading and certain times of the day are not so great for trading. So you have to kind of figure that out for yourselves, depending on your time zone of what works for you and what doesn't. I'm Eastern Standard. So for me, after about 11:30 till about maybe 2 o'clock, it's really not worth my while trading, because I don't win that well. And like they say, if something isn't working, then stop doing that something.
Yeah. And take a note, right? And take a notice, right? And take a notice, right at 9 o'clock. No,
like if you keep complaining about Costco being too crowded at Saturday, don't go Saturdays anymore. Go on Tuesday. It's the same for trading. If it's not working, don't do it then.
Yeah. Take note, like right now it's 9 o'clock, and you see you had this nice little pullback just before the 9 o'clock hour, and now our market's going to be opening up in about another 28 minutes, and this thing's probably going to make a nice little move, and it may be you'll probably be in and out of this trade before the market even opens up.
Yeah, probably will be. I took this trade here. These ones are closed down manually. This was my German that I took. I got in at, I guess it would have been what, 8:24? No, how does that work now? This is a different time. The way
Subtract 7, I think, from these envy accounts.
Okay,
Subtract,
so
that'll be about
7:24.
724. That's
Yeah,
about right.
7:24, and I was out at 7:28 or 7:27. I was out in 3 minutes. Bam, there's my 6% on my $2,000 account. So, you know, it's that's your scalping, but the setup and it's the patience and it's the waiting, but it's the in and out that makes it a scalp trade. You're not sitting in it forever like swing trades, for example, or day trading where you're sitting in it for hours sometimes. But the scalping just because sometimes there's a bit of confusion as to what scalping is. So
we're right about 9 o'clock. Eva, if you do me a favor, stop sharing for a second, because one, I can't find anything else on my screen because of yours. There you go. Thank you.
Well done, Eva.
Yeah, well done. Well done. That was a good explanation of your process. Let me just show one more thing before we go. Let's see, where is it at? Right here. You see our Euro British trade. Remember I said that we had our wedge, and here's my C point. I said I would expect it to come down into our trap area. Look what it did. It came right down in right even with that, and it bounced back up again. And now it's coming to retest it. It retested this 1, 2. This is it retested the 3rd time and still got rejected. So it's pounding its way. It's like a jackhammer trying to pound its way through that point. If it can continue, you can see where I drew this thing. It's like this little wick candle right here. It came down. I used my wedge reference from the high to the low, to the next lower high, and actually this was a little bit actually from the low to the high to the higher low to the lower high. But you can see like this little point, it just this little trap area is still holding. And this is where you may want to be a buyer, or this is where you want to take your profits, because you could be, I mean, it could still go on down to, who knows where, but it's having some problem getting through this little zone. So if you're profitable in this, which I am, like right now, I'm just going to go close it out and say thank you and have a day.
beautiful. It's a beautiful thing, isn't it?
It's a beautiful thing. And so, any last minute questions, comments? Again, yeah, we're going to really start really stressing to put the questions in the question answer box. The chat's really basically for you guys to talk amongst yourselves if you want to, or to give us a private message. But the questions for us to address, it really is helpful if you could put it in the question answer box. We want to make sure we don't miss anything, and like I said, we appreciate everybody's participation. We urge and encourage participation. There is no such thing as a stupid question, because basically bottom line is if you have a question, someone else probably has the same thing too. And it could just mean that we're just making ourselves clear, which gives us another way of trying to be of service to you to help you understand what we're doing. So any last minute questions, comments? Hope everybody made a little bit of money today. And I said, like, tomorrow, I'll be here early tomorrow morning. I'll be here at 7:30 to get things started, but I may have to leave a little bit earlier depending on how things are going. Okay. And apparently nobody here is going to Orlando, so I'm sorry to see that. But I will be leaving for Orlando tomorrow, and I'll be, and I may be able to find a way to get online a little bit Friday. At least I'll get on probably at least to try and get Eva into the room and get her set up. So, but Eva's going to be running the session on Friday for us. So, anyway, have a great day, and if you made some money, put the charts away, put the toys away, and go out and have some fun. Enjoy the summertime. With that, stay green. See you tomorrow.
Have a great day, everybody. See y'all tomorrow.
Have a great day. God bless.